What do 90% of millionaires have in common? It's not what you think. You might assume it's a secret business or a rare talent. But no, it's something anyone can access. It's a rule, an investing strategy that changes everything. Imagine transforming your financial future without winning the lottery or landing a dream job. 12 years ago, a broke student studied this rule. Today, that student is financially free. That's the power of this strategy. Many chase wealth through risky bets and promises. You might have scoured the internet for the next big thing. Crypto, penny stocks, whatever's trending. Yet, your savings barely move. You need results, not hype. You're not alone. Statistics show most investors only gain minimal returns. Even worse, they often lose money. Why is this? Enter the Princeton study. Experts found a simple method that wealthy individuals use regularly. Successful investors consistently use this rule, turning the odds to their favor. Over time, they grow wealth predictably and securely. Let's unveil this secret. It's called diversification. Simple, right? Yet, so few truly practice it well. Look at Warren Buffett, a master of diversification. His empire flourished by spreading investments wisely. Now, imagine you own multiple stocks, property, and a small business. If one falters, others balance the loss. That's powerful. Consider Sarah. She earned $50,000 a year but barely saved. She divided her investments wisely: stocks, real estate, bonds. 10 years later, her portfolio was worth $500,000. This wasn't luck. It's strategic spreading of risks. Your takeaway? Diversify to build a safety net. Now here's something surprising. A study showed diversified portfolios average a 7% return annually. Compare that to risky, single-stock portfolios that often lose value. Next, let's discuss the critical timing approach, dollar-cost averaging. When prices drop, buy more. When they rise, buy less. John, a school teacher, used this over 20 years. His modest monthly investments grew impressively, no matter the market swings. Think about this. How do you handle losses? Most panic and sell. But imagine if you instead stay steady, focus on long-term goals, and ignore market noise. Investing consistently, regardless of market conditions, builds resilience. Consider your future. What do you want financially? Security? Freedom? Both can be yours. Use diversification and dollar-cost averaging. Create a strategy. Follow it unwaveringly. The takeaway: match your actions to long-term goals. Don't chase fast wins. Let's interrupt this with a stat. Only 20% of day traders profit over time. Contrast that with diversified portfolios, where steady growth is more common. On to the final piece: reinvesting dividends. When you reinvest dividends, your returns can grow exponentially. Think of it as a snowball effect. Start small. It gradually becomes immense. Historical data shows almost half of stock market growth comes from reinvested dividends. Compounding grows your wealth exponentially. Now, remember Jack? He started with $1,000, reinvested all dividends, and stayed consistent. 25 years later, he was a millionaire. You too can leverage this compounding snowball. We've crossed a journey of investing mysteries. Recall the hook. Millionaires quietly follow this rule, amassing wealth over time. This secret isn't exclusive. It's about diversification, steady investment, and reinvestment. Your action? Don't just listen. Begin today. Adjust your portfolio. Spread out risk. Embrace dollar-cost averaging. Reinvest returns. Watch your wealth grow. Like this journey? Subscribe for more paths to financial freedom. Your journey starts now. Let's make it count.